Yeah, good day trader. This is WASKILSMART once again. So today we'll be talking about the liquidity principle and the liquidity concept. So if we are talking about the liquidity principle and the liquidity concept, so that's the main that's the fundamental things in the financial market, which is the forex market. Don't think the forex market is for your well-being. No, the forex market is not for anybody well-being. The forex market is for the financial institutions well-being. The only the, the only thing they go for is liquidity. They want gains for themselves. That's all. So they and the two things market always draw to. The first thing is the imbalance, and the second thing is the liquidity pool. So that's the two things market draws to always. So if you check your chart and you can see these two things I mentioned, then congratulations to you. You have already passed the stage one. So that's just the things market draw to. So now today here we'll be talking about the liquidity concept. So I will just try and brief things out. We have two types of a way the iPhones or the institutionals always take out liquidity. The first one is the buy stop liquidity, which is the BSL. This the second one is the sell stop liquidity, which is the SSL. So the buy stop liquidity is originated by stop losses of sell orders. So which means that if the liquidity on top of this market is known as buy sell. So what they will have to do is just take out your liquidity and sells directly. So just from a sales order, they sells where you are buying, they make you the liquidity as concept of it. So and people that always fall from inside of this is people that are trading breakout patterns, all those stuff. They are the one falling inside of that trap a lot. And so from this concept today, because it will be to parts, I'm doing it to parts. So this will be part one, and today's what we just be talking about is the basic and the common liquidity concept. So which means that there are things that are called basic and common concept, so which everybody's supposed to know as a trader. Okay, fine, let's start. So you can see this trade here. This is Euro USD 4 hours. As I always tell you, if you are a day trader, you are a scalper, first thing you have to do is check your 4 hours. That's where we all started from. If you are too lazy to check your monthly, your weekly and your daily, just check your 4 hours. It's very hygiene to check your 4 hours. Okay, so let's start. So you can see this eye here. So this eye here is the eye of a week, so which comes on March 17. So this is the eye of a week. So now there is a liquidity on top of this eye here because it is the eye of a previous week. So you are expecting market to clear out the liquidity on top of it. You understand? I hope it's very clear like that. So this is what you are going to do for me, because today you are going to talk about the basic concept of it. If you look at your chart, try and look for the previous month highs, the previous week high, the previous day high, the high of the day, the swing high, and the retail resistance. So the retail resistance is just the way we normal retail traders always talks about. This is the high, this is the high. No. But just try and look for all these highs I talked about: the high of the month, high of the week, high of the day, and highs of the day. So that's just it. So let's begin. So this is an high of the week. So I'm expecting the previous week. If you want to go higher, then you're supposed to take out this high. Hope you understand. So now when market goes Now market goes higher to it. Now you can see it here. When market enters inside it and clears out the liquidity I was expecting market to clear out, then so you can just draw it here. Yeah, market clears out the liquidity. But this is one thing I want to we want to learn here. So because market goes up and clears out the liquidity does not mean I should enter inside the trade and started selling. No, that's not it. You can get stuck out. Market can goes up and don't come down. So it is the market well-being, not your own well-being. They doesn't care for you. They doesn't know who you are. They doesn't want you to be profitable. That's why they say 1% of all retail traders gain, while the 99% lose their money. So this is here. When market goes up to this extent now, what you have to do is just that when you see this market goes up now, just draw a box and go to your 15 minutes to wait. Okay, so this is 15 minutes here now. So this is the shaded place that we shaded from the 4 hours that the market take out the liquidity on top. So now what I'm looking for in this 15 minutes is that I want to see in the market what and why I should be a seller. You know, on the higher time frame, which is the 4 hours, you already have a perspective, or you already have an innovative thing in your heart that says you have to be a seller. But now I want to ask myself on the lower time frame, what should I see that will make me a seller? Now this is what you do here. So you already come to the lower time frame now, don't worry. So what you just have to do is you have to search from the institutional structured, like the one we did when we were talking about the order block theory. So which means you have to look for the break of market structure and the change of character, then put your breaker block, then to the entry like that. But for here now, I want to do something more extreme, better than that. So now when I check my 15 minutes, it seems I won't be saying anything, but I see something. This is here. Let us draw this line. Yeah, so this is the first thing. You see this low here is the one that corresponds to this eye that enter inside this, that clears the liquidity, the buy stop liquidity on top. Hope you understand. So this liquidity, this low here, I want to see market breaking it. So if market can break this low here, then I will now accept that now the market wants to be a seller because there is a change of character. So from here I just put it here. So now there's change of character at this point here. So we just put it here. Change of character has occurred because here market breaks down. If market wants to go up, market should not have break this low here. Hope you understand. So market should not have break this low here. Market is supposed to enter inside this other block, then move up. But because market breaks it, then this one tells me that the pattern and the structure of the market has changed. So now what this implies for me is that now what I see on my 4 hours, that the market clears out a liquidity, then now it tells me that market is going down. So this tells me that market is going down. So what I have to do is, this is my breaker block here. So let me just put it the color so it will be nice. So this is my breaker block. I hope you can see it here. Yeah, so this is my breaker block, and you can just be short from that side to be a silver split on the silver spot. So just put it like this and go down. So that's 73. So 73 plus 73, so that also be 146. So this is a 145. So 145 points. So one, yeah. So that's it here. So now once this is 1 to 1, so which means that I'm losing this, I'll be gaining this. So it's It's very ideal, so just please enjoy it. So that's a little thing for buy stop liquidity. You can see it here, see how the market goes up, goes down very big, 150 pips. So which means you are losing 73, you are gaining 150. That's 1 to 2 risk reward ratio. So that's just for the liquidity, the buy stop liquidity. So on the next video we'll be talking about the sell stop liquidity. Please do well to like, share and subscribe. I'll be very happy with it. And don't forget to subscribe, that's very, and you can comment, tell me what you want me to do and what you want me to teach. I'll be very happy about it, and I will teach it and I will do it with loves, everything. Please do well to follow me, and if you want to join my Telegram group, you can just comment and I will drop the link for you. Thank you.